Thank you for listening to the 174th episode of the listener-supported Congressional Dish. I'm your host, Jennifer Briney. And for those of you who are new to this podcast is about Congress. Not the horse races for election to Congress, but what actually happens in Congress. And since the beginning of this year, there has been a fire hose of legislation that's become law. And I'm reading those laws to find out what the hell they're doing to us while the rest of the media obsesses over everything Trump. Now, recent listeners know, because this is what I've dedicated the last few episodes to, but recent listeners know that on March 23rd, the most important law so far of this Congress was signed. That was the 2,232-page government funding law for 2018. That was 6 months late and available for reading for just a day and a half before it became law. Right now, I'm about halfway through the State Department section, and holy rabbit holes, I found the economic warfare funds. And I'm not getting bogged down into this, but what I mean for you newbies when I say that is that when it comes to foreign policy, since 2003, when I lived in Germany for a little while as an exchange student, I've been obsessed with finding the answer to why my country invaded and overthrew the government of Iraq. That's really what started me on this whole adventure that brought me here. And in my quest for knowledge, I've discovered that we have a long history, starting at the end of World War II, of overthrowing other countries' governments, a history that no one taught us millennials in school. And basically, what I think is going on here is that the goal of the regime changers is to get the entire world to operate under one economic system, the system created after World War II and operated by the World Trade Organization, World Bank, and International Monetary Fund. Their recipe for convincing other countries to adhere to their rules always starts with economic pressure. And if that doesn't work, that's when we bring in the guns, either our U.S. guns or we hire randoms to do the fighting for us. And what I'm discovering in the State Department section of the funding law is the pots of money used for those economic wars. There are so many funds, and some of them are jaw-droppingly shady. But I need some more time to really figure out what they are before I can understand the funding and all that. Also, our new creepy psycho of a Secretary of State, Mike Pompeo, is testifying right now as I record this. And so, armed with the knowledge of what the hell is going on with those funds, I'm going to then watch his testimony from this week in both the House and the Senate and try to figure out what in the hell this servant to the corporate world is planning to do while in charge of U.S. diplomacy and while he's in charge of our economic warfare funds. And so the 175th episode of Congressional Dish is gonna be a doozy. But this episode is a doozy too, because sitting on Trump's desk, actually, that's not true. He just signed it. Trump just signed S2155, the Economic Growth, Regulatory Relief, and Consumer Protection Act, which is better known as the Bank Lobbyist Act, which by the end of this episode, I think you'll agree is the more honest title. This law contains parts of 25 different bills, almost all of them related to the banking industry. This law first passed the Senate, passed 67-31 with every single Republican voting yes, along with 16 Democrats and independent Angus King of Maine. Then on Tuesday of this week, with no changes made, which meant that it went directly to Trump's desk after this. But on Tuesday, it passed the House of Representatives 258-159. It wasn't even close. That's because every Republican voted yes, with one exception. The only Republican to vote no was Representative Walter Jones of North Carolina, who over the years has been the sole Republican to stand up to his party many, many times. I really respect this guy. And as for the Democrats, 33 of them, or 17% of the Democratic Party in the House of Representatives, helped the Republicans and the banker lobbyists make this a law. Now, this law is a big deal, and so I read it for this episode, and we'll give you information on all the provisions that either jumped out at me or, quite honestly, I was able to understand. I am sure that I missed stuff. But there's a lot of knowledge worth having about the laws that are changing. Actionable knowledge that you will be able to use to help you make decisions about where to put your money and how to protect your identity. You know, this episode's an important one. And this is information that I guess is just too damn hard for journalists who are paid millions of dollars a year to dive into. $1 million paychecks apparently let you do nonstop interviews, screaming match roundtables, and stories about porn stars and pee-pee tapes. But reading a law that's available on the internet, oh, that's too much to ask. But you, because you have somehow discovered this little podcast, you will know about these changes and you will understand them. And if you find value in this information, please support this podcast, which operates on the value for value model, which is a lot like the restaurant business model. because you're going to get this ad-free episode upfront, and then you are requested to pay afterwards. The only difference between this and how restaurants operate is that payment for this podcast is done on the honor system, and you get to choose how much this podcast is worth. But seriously, anything is better than nothing. And I'll tell you about all the available payment methods later, right before I thank everyone who paid for the last episode. And this week, I'll be joined by my husband, Joe. But if you enjoy this podcast and get value from the work I've put into it, please pay for it. It's also very helpful for the search rankings if you rate the podcast 5 stars and leave a kind review in iTunes and really anywhere else where podcast reviews happen. I know this podcast is on iHeartRadio and Spotify and Stitcher, and it's everywhere. And so if you guys will give it a high rating, that only helps other people find it. Oh, and then also, I haven't talked about this in a long time, but we also have a free Congressional Dish app. And for the first time, I'm going to add some extra content to that free Congressional Dish app, which is available for you in the App Store and in Google Play. Because for the last, since I started this 5.5 years, when I outline these bills and laws, I've been linking to the provisions on a website called govtrack.us. And I still find GovTrack to be very valuable. But they've started inserting ads into the actual bill text, which is pissing me off. And so I'm not going to use them for my links anymore. Instead, I am linking to the PDFs of these laws that are available directly from the government. The thing about that, though, when I link those for you, I can only link to the page itself. I can't give you a highlighted version. However, I can give you my highlighted PDF in the Congressional Dish app. So if you want to scroll through and see what I highlighted to make my own notes, that's where you can get that now. And I'll continue to do that for you in the future. But of course, if you just want to use the website, you can find these provisions using my outline in the show notes where I have linked to the PDF, the pages. It'll take you at least to the page where you'll find this information. And I honestly believe that the show notes are the most important thing that I do. And so you can use them to check my work or to win political fights with friends. And that's honestly a motivator for me in spending so much time on the show notes because I use the show notes all the time to prove my points to people. So that's really useful for you too. But the point that I'm trying to make is that you are going to get the highlighted PDFs in the free Congressional Dish app. So use that app and please rate that 5 stars if you enjoy it in the App Store and Google Play too. All right, enough of that. I want to talk about the Bank Lobbyist Act. So let's get started. All right, so to begin, here's a good example of how this law has been branded by those who voted for it. And this is the new law's main sponsor, Senator Mike Crapo, of Idaho.
S2155 is aimed at right-sizing the regulation for financial institutions, primarily community banks and credit unions, which makes it easier for consumers to get mortgages or obtain credit. It also increases important consumer protections for veterans, senior citizens, victims of fraud, and those who fall on tough financial times.
And that is a misrepresentation of this bill, but there is some good stuff in this law. And so let's get started with that. Those important consumer protections that he was talking about. And then I'll inflate your anger bubble as we go. So first up is a provision that was a direct response to the massive data breach that happened last year, which I told you all about in episode 160, the Equifax Breach. Now, Equifax is one of the 3 credit reporting agencies, which despite their names are not government agencies. In fact, their entire existence is a scandal as they started as secret banker meetings where they would get together to trade gossip about which peasants can be trusted with loans and which ones can't. Seriously, listen to episode 160. It's fascinating. It's one of my favorite ones of the year. But now the 3 credit reporting agencies, Equifax, Experian, and TransUnion, have become central to our banking system. And it's very, very hard to avoid them getting your information because they're the ones that collect your information and tell banks your credit score, which determines if you get a loan and for what terms. So for example, a high credit score equals lower interest rates usually, and a low credit score often equals high interest rate loans if you're approved for the loan at all. But the point is that these companies, despite the fact that many of us have never heard of them, have an enormous amount of information about you. And then they turn around and make money by selling that information to the banks and to other companies for marketing purposes. If you've ever opened a credit card, they have your information. If you've ever taken out a loan, they have your information. If you've ever rented an apartment, they have your information. Like I said, they're extremely hard to avoid. And last year, Equifax was hacked. and the personal information they had on almost every American adult was released to God only knows who. And so in this new law, Congress made some demands of these companies, demands that you can use to protect your information. One of the new provisions regards a security freeze, and a security freeze essentially stops companies from getting your information from the credit rating agencies. You have to actually go out of your way to freeze your account, and when your account is frozen, you need to unfreeze it in order to allow a company to run a credit check. So for example, let's say you've frozen your credit to protect your information, but you're applying for a loan for a car. You would have to get your account temporarily unfrozen so the credit check could be run, and then you'd have to refreeze it after they get the information that they need. Right now, that's an enormous pain in the ass. And I know this as someone who recently had my identity stolen. The credit rating agencies required all kinds of information to be mailed to them in writing. And then there were long wait times for the locks and unlocks to happen. And then there's also the annoyance of the fact that all three of these companies have different policies. It's a fucking nightmare. And the vast majority of us just give up, which is exactly what they want us to do. And so this law is going to make that process quite a bit easier. And so what happens specifically is this law is going to require that credit reporting agencies place a security freeze free of charge for consumers within 1 business day if requested by phone or internet, or 3 business days if requested by mail. Within 5 business days of getting the request, the agencies must then inform the consumer, so you, that the freeze has been placed and then inform you how to remove the freeze. Removals must be done within 1 hour, love that, of a phone or internet request, and within 3 days if requested by mail. And then temporary removal requests must be granted for the exact amount of time requested by the consumer, which is you. The law also requires that the credit reporting agencies set up a website for requesting these freezes. Also for requesting fraud alerts. Those are extra security for people like me who have already had their identity stolen. And then you'll also be able to opt out of having your personal information sold to marketers, which is pretty fucking fantastic. Now, in my experience, I've been able to lock my credit with one agency because I pay them every month for credit monitoring, but I haven't been able to successfully pull it off with the other 2. And so this law is going to change that. And you better believe I'm going to be actively locking and unlocking all 3 the minute that becomes available, which has to be within 120 days of Trump signing the law. So 120 days of today, 120 days after May 24th. That's when we should be able to easily lock and unlock our accounts with all 3 of the agencies, which is pretty cool. The Federal Trade Commission is also going to make this easier for us by setting up a single website linking to all of the websites of the 3 credit reporting agencies. So I think that's the best part of this bill, honestly. There is one loophole, however, that is worth knowing, which is that these credit freezes are not going to stop law enforcement, debt collectors, or, quote, any person using the information for employment, tenant, or background screening purposes from accessing a frozen credit report, unquote. And so in the example I just gave of going to buy a car and then they need to run your credit. So that's the type of scenario where you're going to have to either call in or go on the internet, get your account unfrozen, and then refreeze it after the run. However, if you're going to rent an apartment, this says that they're going to be able to just run your credit despite the fact that you've tried to lock your credit down. And then the other part of that really, really bothers me is that your employers will also get access despite your freeze. And I think that's kind of a scandal because your past financial problems don't indicate your future work performance. And so I'm not sure that employers should be allowed to require credit checks at all. And I definitely don't think that they should have a spot reserved along with law enforcement inside, the credit freeze loophole. But it is what it is. So just know that your employer is able to run your credit whether you've locked your account or not. It's also worth knowing that this is less than what we could have gotten. Senator Elizabeth Warren has been the fiercest defender of us trapped consumers in these credit agencies since the breach. And she was pushing for provisions that would have imposed mandatory financial penalties for data breaches because losing money is really the only thing that makes a for-profit company care about this type of thing. And she wanted those of us who paid these companies for credit freezes since the breach to be refunded our money. But the Republicans didn't allow either of those to become a part of the law. So there's also a provision in here related to credit reports that protects veterans. But the problem that this solves only exists because of the Republicans' privatized program to protect veterans. In episode 161, I told you all about the Veterans Choice Program, which was a program started during the Obama years in response to veterans having to wait for a long time for appointments at the Veterans Administration. You see, while most of us are stuck in the fully privatized health insurance world for our medical care, veterans have access to government-provided health care provided by the Veterans Administration. Due to the fact that we keep fighting never-ending wars and due to the aging Vietnam veteran war population, the Veterans Administration got swamped with patients. Now, instead of expanding that system to fit the need, the Republican Congress decided to create the Veterans Choice Program, with choice being the code word for private. What the Veterans Choice Program does is it allows veterans to go to private doctors if their VA doctor is over 40 miles away or if they'd have to wait over 30 days for an appointment. Although there is a bill that might even be law by now, I don't know. But they are trying to loosen those standards as I speak, which in a way that would allow more veterans to be sucked into the private sector healthcare system. But anyway, the problem is that the VA Choice Program was created very quickly and has been changed multiple times. And so a billing system for all these private doctors has never really been put in place. They're still trying to figure that out. And so doctors who are treating veterans are not getting paid quickly enough by the Veterans Administration, and they're sending the veterans' accounts to collections, which is dinging veterans' credit scores. And so this new law says that if a medical service is delinquent by less than a year, the veteran can submit information to the credit rating agencies and then have their medical debt removed from their report. This law also says that within 1 year, the Secretary of Veterans Affairs, who it's worth noting that that is a position that is currently unfilled. But anyway, the Secretary of Veterans Affairs must create a database to allow credit reporting agencies to verify veterans' medical debt. So that'll make that a lot easier. And also within 1 year, the Federal Trade Commission will have to create regulations requiring that active duty military members be given credit monitoring services for free, which I think all of us should get. But hey, some of us is better than none of us. Now, both of these are good ideas that will help veterans. There's no way around that. It's true and it's good. But I do think it's important to note the unintended consequences we see here of privatizing part of the Veterans Administration. Billing in-house was a relatively easy thing to do. Now that they're adding thousands of private doctors from all over the country, well, that system has been difficult to create since day one, and veterans are serving as guinea pigs who are suffering financially while the privatizers are trying to make this privatization plan work. And then the last provision related to credit reports is one that's supposed to help young suckers who ended up with predatory student loans. One provision that the bill's supporters say helps students is one that allows banks to remove a customer's student loan debt from their credit report if the bank decides to give the student a new monthly loan repayment program and if the student makes their payments. But here's the rub. That's 100% up to the banks. So if they want to force a student to keep the predatory terms, if they want the student's debt to keep racking up thanks to a high interest rate and keep the debt on their credit report, dooming them to high interest rates for any other loans they need, the banks can totally do that. This provision depends entirely upon the kindness of the banks, and so students. You can go ahead and try to get new terms and get the debt removed from your credit report, but don't hold your breath because it's 100% the banker's call. Banks are given permission to help you, but this Congress is not going to force them to. Another provision related to student loans is one that prohibits banks from declaring an automatic default or accelerating repayment of student loans in the case of a cosigner's death, and banks will have to release from responsibility a cosigner if the student dies. However, this will only apply to student loans that are created in 2019 or after. So every student loan that exists right now and every student loan that will be created before the end of the year will allow the banks to keep cosigners on the hook for the education debt of a dead person, and banks will be allowed to demand immediate full payment from a student if their parent or other adult cosigner dies, as if that person dying isn't traumatic enough. And so this doesn't help a single person in my generation who is still being financially crushed by loans they took out when they were 17 years old. By only applying this to new loans that are created next year or after, that makes this provision damn near useless for damn near all of us right now, although it could help our kids sometime years down the road. One result of so many in my generation being crushed by never-ending student loan payments is that many of us are not buying homes. We're all delaying adulthood until our mid-30s and even 40s. God knows I am. And since houses are so expensive for my generation, since we're expected to pay hundreds of thousands of dollars more than the piles of wood and bricks are actually worth, everyone in my generation needs to borrow from the banks to buy our homes, or I should say rent to own our homes, because none of us can afford to buy our homes outright, or very few of us anyway. Well, the loans the banks provide for homes are called mortgages. And in the W. Bush years, the banks committed massive amounts of fraud related to mortgages, so bad that it crashed the entire world's economy. Now, what they did is that bankers gave mortgage loans out to just about anyone with a pulse. The salesman bankers did this for fees and bonuses because they got paid when you signed the loan. They got paid more for loans that made the banks more money, loans that had high interest rates or loans that were affordable on a monthly basis for the first few years, but then had payments jump up a year or two later. The bankers in the desks didn't care if their customers could pay the loan because they got paid just for creating a loan. There were no repercussions for those desk bankers if the loan was never repaid. Then their bosses higher up in the bank didn't care if the customer couldn't repay because the banks were going to sell the loan almost immediately to someone else. The loans were going to be sold into most likely mortgage-backed securities, which are like baskets of loans. Loans that then got passed around and traded so often that the banks and the homeowners ended up having no idea who actually owned the loans, since the banks didn't bother transferring the loan titles and the paperwork. You probably owned other people's doomed to fail mortgages at some point and didn't even know it because these were sold to mutual funds, which make up many of our 401ks, and to pension funds too. They were bought and sold by irresponsible bankers, chasing fees for their own pockets all over the world. This went on for years, but as more and more of those monthly payments jumped up and millions of people who shouldn't have qualified for their loans in the first place began to find themselves unable to pay the high monthly payments, well, the whole game of loan hot potato had to come to an end. The banks and the funds holding onto the toxic loans that bought them for the promise of high interest rate returns, well, they couldn't sell them. And then banks that had a lot of these toxic mortgages, like Bear Stearns and Lehman Brothers, those banks failed. Then AIG and other insurance companies, which insured those banks, they needed money to avoid going bankrupt. And so the whole system came crashing down until we bailed it out because of the greed and gambling of the bankers in the mortgage scam. And then there was the foreclosure fraud, which was finally fully explained to me in a book I read on my Mexico trip that I couldn't put down. It's called Chain of Title by David Dian. You need to read this. It's one of the most fascinating things I've ever read. But this book follows the stories of 3 people who couldn't keep up with their mortgage terms and who actually fought the foreclosures on their homes. And through their story, David Dian explains in a way that any of us dummies can understand the straight up fraud that took place. Quite simply, using obviously forged documents, the bank stole literally millions of homes. Here's how it worked. Let's pretend it's 2006 and you went to your local bank branch to get a loan to buy a house. The banker gets extra money for steering you towards a loan that makes the bank the most money. So this is often a tricky loan with an interest rate that shoots up after months or maybe a year. But the thing is that you don't understand that because the paperwork is over 50 pages long and this banker is so cute and friendly. Why would he fuck you over? Why would he set you up with a loan with the worst terms possible? Well, because he's getting paid to. And once he's paid, he's not responsible for what happens to you after. So you sign this loan and you move into your house. But of course, a reality that most homeowners don't want to acknowledge is that you don't own shit until you've paid back the bank for every penny. The truth is that you move into a home the bank owns. You are essentially renting to own that house eventually. Meanwhile, while you're nesting, the bank you got your loan from has already sold that loan to another bank, or more likely, to a mortgage-backed security. But here's the problem. The banks in most instances never bothered to transfer the titles of the homes as they sold their loans. And so in literally millions of cases, no one knew who actually owned the loan or the home. People were getting foreclosure notices from companies they had never even heard of before. And the few people who bothered to challenge the foreclosures discovered that the documents proving ownership, proving that the bank had the legal right to take the home, most of the time those documents didn't exist. And so what did the banks do? Well, they forged the documents. Documents that couldn't be found for years when challenged in court would magically be found by the banks, but the notary dates would be after the foreclosures were started. Or these documents wouldn't be signed at all, or in some cases, they forgot to update their templates and they said that the house belonged to, quote, bogus assignee, unquote. That's a quote! The documents actually said that. Now, what should have happened is that the foreclosure should have been stopped by the judges because without the legal titles to the houses, there was no legal standing to foreclose on so many people's homes. But individual judges were foreclosing on hundreds of homes every week and taking no time. We're talking like a minute or less to examine the paperwork for the foreclosures that weren't challenged, which was most of them. Because after all, people having trouble paying their mortgages don't have hundreds of extra dollars lying around for lawyers. And so banks that never had any legal right to take people's homes took literally millions of people's homes. Banks broke into people's homes and changed the locks, throwing their belongings out in the yard. And sometimes they were so reckless that they did this to the wrong houses. Banks also foreclosed on people who had never missed a payment or who had been short on one payment by 17 cents. Banks foreclosed on people illegally, breaking the law and the terms of their own agreements in millions of cases. And they got away with it because the Obama Justice Department knew all about this. But the settlement they created with the banks actually let them just pay their way out of it in a number that was way less than the profits they made on this scam. And their settlement made it impossible for the Justice Department to actually prosecute the massive fraud that was conducted by just about every bank you've ever heard of. And the worst part? It's still happening. For an economy in the good condition we have now, we still have an abnormally high foreclosure rate. We also don't know who owns the foreclosed properties. They created an absolute mess of the property records all over the United States, which is a problem that we're not even trying to fix yet. But when we do, oh boy. Seriously, read Chain of Title by David Dian. It's one of the most fascinating, well-sourced books I've ever read in my life, and I know that I am not doing this story justice in my summary. But the point I'm trying to make here is that via mortgage loans, the banks, so many banks in the United States, together committed one of the largest and most damaging crimes in U.S. history. And the end of the story has still yet to be written. Because here's the real life effect of this. Millions of people were thrown out of the homes that they thought that they owned, which put them all in the rental market. You know, here in the Bay Area, we bitch all the time about our obscenely high rents. But here's the thing that I've discovered from traveling all over this country the last few years. Everyone is experiencing skyrocketing rents. The Bay Area, Los Angeles, San Diego, Denver, Nashville, Boston, New Orleans, Orlando, Chicago, whatever city in whatever part of the country you go to, rents have skyrocketed. And maybe that has something to do with the millions more people entering the rental market when the banks stole their homes. And so what do the banks do with the homes that they steal? Well, then they sell them again for a higher price. Or they convert them to rentals and make money there too. No matter what, the banks win, and we pay more. And so what did this Congress do about this ongoing scandal, which is costing all of us normal people more money? Well, this new law exempts banks with under $10 billion in assets, so relatively small banks, from ability to pay documentation requirements for mortgages as long as the loans do not have any interest-only or principal-increasing features. So one of the problems at the heart of the financial crisis created by mortgages was that the desk bankers were not making sure that customers could afford their loans. So this law allows small banks to skip the part where they check to see if their customers can afford the loans, as long as these loans that they're selling are not the shadiest and trickiest of loans. But adjustable rate mortgages, where you sign expecting one payment every month and then see that jump a few months later, that's allowed. Loans with interest rates in the double digits, that's allowed. You know, just because a bank is small, that doesn't make it automatically ethical. Allowing bankers to skip the collection of documents proving the ability to pay the loan back is stupid, and it shouldn't be allowed anywhere. This provision also says that the bank is supposed to keep the loan in their portfolio, but there's a loophole. The loophole allows the loan to be sold as long as the next bank keeps the loan in their portfolio. And so this is that chain of title thing. In the W. Bush years, even though it was legally required then too, the banks weren't bothering with transferring the titles as they sold these loans all over the place. This basically just reminds them to transfer the titles. It just makes it easier to legally foreclose on people when these loans eventually go bad. Which again is fine for the bankers because they can just sell the house again. You lose, they always win. Along these same lines, there's another provision that allows people selling manufactured homes, which are homes created in a factory and delivered to the customer to be installed on their land. Well, this law is going to allow people selling those types of more affordable homes to guide their customers towards getting loans from banks owned by the same company, as long as they disclose to the customer in writing that they have a corporate affiliation with the bank that they're pushing them towards, and as long as they do not directly negotiate the loan terms. Most importantly, the home seller would be allowed to be paid for steering customers to their company's bank. Now, this is something the Republicans have been trying to get into law for years. This is very similar to the first part of H.R. 650 from the 114th Congress, a bill that got a veto threat from President Obama during the last Congress, which I read and outlined for Congressional Dish episode 99. This version, the one that became law, wasn't quite as an extreme a favor to the people who sell manufactured homes as the bill from the last Congress would have been. But the point is that the Republican Party has been trying to do this for a long time, and now it's done.
Yay!
Now, the biggest beneficiary by far would be Berkshire Hathaway, which owns both Clayton Homes, the nation's largest home building company, and Vanderbilt Mortgage, a company that offers particularly expensive mortgage loans. Berkshire Hathaway finances 7 times as many mobile home purchases as their next closest competitor, which really isn't competition at all. In fact, the owner of Berkshire Hathaway, the celebrity billionaire, also the third richest person in the United States, Warren Buffett, well, he recently bragged in an investor letter that Berkshire Hathaway controls damn near half of the entire manufactured home market. Berkshire Hathaway controls 49%. Berkshire Hathaway is a truly enormous company, and using different names is a deliberate corporate strategy used to convince us that these are different companies, to give us the illusion of choice, and to hide just how enormous companies like Berkshire Hathaway are. For example, here are some companies that you probably thought were different companies, but nope, they're all Berkshire Hathaway. BNSF, which is one of the 2 huge railroad companies that control the vast majority of our freight trains and rail lines in the United States. They also have Duracell, the batteries. They have the Undies Company, Fruit of the Loom. They have Geico Auto Insurance. They have Jordan's Furniture, where I bought my ugly ottoman. They have Dairy Queen. I do love a blizzard. They have Kraft Heinz, which makes all kinds of horrible for you processed foods. Speaking of processed foods, they also have See's Candies. They also have Clayton Homes, obviously, and they have at least 54 other parent companies. But the thing is that these companies are split up and named something other than Berkshire Hathaway too. So for example, Berkshire Hathaway owns Clayton Homes. But Clayton Homes is split up and has a bunch of different names because Clayton Homes is also Oakwood Homes, Goodall Homes, Summit Custom Homes, School Homes, Crest Homes, Karsten Homes, Marlene Homes, Golden West Homes, SE Homes, Norris Homes, Cavalier Homes, Giles Homes, Buccaneers Homes, and likely more, because they've been on a buying spree these last few years. In fact, they've been steadily gobbling up all of Clayton Homes' competitors since 2003. Now, along with all of these companies, somewhere on the Berkshire Hathaway corporate tree is Vanderbilt Mortgage. According to their website, Vanderbilt Mortgage specializes in, quote, new and used manufactured and modular home financing, unquote. So it's a mortgage specializing bank inside Berkshire Hathaway. Which means that an excellent money-making idea for Berkshire Hathaway, the company that owns every one of these companies, would be for Clayton or whatever company homes to sell you a house and then suggest that you call Vanderbilt Mortgage. The names are different. Doesn't sound like a Berkshire Hathaway employee is sending you to another Berkshire Hathaway employee for a loan, but that's exactly what's happening because they are the same company, and this happens all the time. And this new law allows the guy selling you the Berkshire Hathaway house to get extra money if you get a loan from the Berkshire Hathaway bank he pushes you to. And in real life, chasing bonuses incentivizes the salesperson to just get you to sign up for the Berkshire Hathaway loan, regardless of the quality of the loan for you. The Berkshire Hathaway employee gets paid no matter how bad of a deal it is for you, their customer. It doesn't matter to them. They get paid, even if you could have gotten a much better loan with less interest from another bank. And there's evidence of this happening to people. In 2016, Clayton Homes foreclosed on 1 in every 40 properties, over 3 times the national average. So the loans that people are getting for these homes, they're not great. They're not able to pay them. And that works out great for Berkshire Hathaway. You pay a down payment, which they get to keep. You then pay their high interest rate, straight bank income, until you can't pay anymore. And that's when the foreclosure is done. And that's when Berkshire Hathaway gets your house back, which they can sell again for a higher price. You lose, they win. And having their employees steer you to their bank with their high interest rate loan made them more money while you were trying to pay for that house you never really owned. You can see why the employee would do it. That person gets paid. And you can see why Berkshire Hathaway's banking branch would pay that employee. They get the money from your interest. They just needed this to be legal again. Dodd-Frank made it illegal. They needed the law to change. And so with this change in this new law, they clearly won again. Berkshire Hathaway, a company that we know tricks people into predatory loans and is a foreclosure machine, got a provision inserted into law allowing their companies to steer customers to their predatory loans. After all that has happened in this last decade, the fact that this is how Congress has decided to respond shows you in the clearest of ways that the 115th Congress, including the entire Republican Party and way too many Democrats, are working for Berkshire Hathaway and other companies like it. They are not working for you. And some Democrats, only Democrats and Bernie Sanders in Congress, are aware of this and are trying to fight it. But they're outnumbered, which is our fault. We choose who serves in Congress. But here's one of them, Senator Sheldon Whitehouse, speaking to a small room of mainly elderly people this week at the Center for American Progress. I saw this speech on C-SPAN and it stopped me in my tracks. And by the way, he's one of the Senate Democrats who voted against this bill.
If you look out at the American public, you see a very large segment of the American public that feels it is not being listened to. They don't believe that Washington is listening. They don't believe that the powers of government reflected here are listening to them. And they're not wrong. If you look at the Bartels-Princeton study, it shows that there is essentially zero statistical correlation between what we do in Congress and what regular people want Congress to do. Move up to the 1%, move up to the big corporations, and suddenly there's a very, very powerful statistical correlation. So it is very clear that, in fact, in many significant ways, the government of the United States has indeed been captured by big special interests.
And in this case, the special interest that got their way is the Manufactured Housing Institute, the industry's trade group. It was one of the 215 groups with financial interests that lobbied for this law. But the Manufactured Housing Institute is largely a front for Berkshire Hathaway's manufactured home companies. So far for this upcoming midterm election, affiliates of the Manufactured Housing Institute have handed out over $100,000 directly to candidates, most of them Republicans. They have also spent almost $900,000, so almost $1 million during this Congress, on 15 lobbyists, 10 of whom used to work in the government that they are now working to influence on behalf of our country's third richest dude, Warren Buffett. Their lobbyists include Representative Steny Hoyer's former press secretary, the legislative director for Representative Sean Duffy of Real World Boston fame, the former staff director of the House Financial Services Subcommittee on Financial Institutions and Consumer Credit, and the former staff director for the Senate Banking Committee. And that's just for this upcoming election. Since the financial crash, their spending on our election has gone up almost every year, and they have spent over $5 million lobbying Congress for laws like this. And what do they get in return? Well, one member of the Manufactured Housing Institute, Berkshire Hathaway, just recorded $32.55 billion in profit for the last quarter, which is 5 times more than they made in profit the quarter before. Much of that profit is from their new lower corporate tax rate, down to 21% from 35%, another gift this bought-off Congress granted them this year. So they've spent $5 million to influence for laws that allow $32 billion in profit in one quarter to be possible. I'd say their election influence investment is working out for them just fine. Now, again, the reason that we're being told that this law was necessary by everyone in Congress who voted for it went something like this. Here's the bill's author again, Senator Mike Crapo.
Since the passage of Dodd-Frank, our big banks have profited wonderfully. But our small banks, our small financial institutions, credit unions, and community banks have suffered terribly.
Which is a lie. 96% of community banks, which are being used as cover for these efforts, well, 96% of community banks are profitable as of December of last year. But this law did the small banks favors nonetheless. One of the things this law does is it exempts banks with less than $10 billion in reported assets from rules that limit their stock market gambling with our deposits, rules that require reporting, and other standards as long as they hold on to between 8 and 10% of their money in case of a crash or a run on the bank or whatever. So these already profitable small banks are now allowed to gamble with your money easier than the big banks are. Now, the fancy banker speak name for the amount of money a bank has to actually have in their possession is leverage ratio. And so knowing that, here's what the Congressional Budget Office, which is the nonpartisan group that judges the financial effects of bills and laws, well, this is what the CBO said that this change would do. Quote, under the bill, the new leverage ratio would not account for the riskiness of the assets held by community banks. Thus, institutions could hold assets with a greater risk profile than they do now without having to hold onto any additional capital, unquote. In other words, this makes smaller banks more risky. They are allowed to gamble with our deposits, and they won't have to hold on to any extra money in case their bets go bad. So remember during the Occupy Wall Street era, when a bunch of people pulled their money out of the big banks and put their money in community banks for safekeeping, and, we also did that to stick it to the big banks that wrecked the world's economy. Well, those small banks, where we thought our money was safe, those are now allowed to be the most reckless with your money. Joke's on us, as usual. And as far as Congress is concerned, this 15-page document with this warning was released in early March. And so no one in the 115th Congress can reasonably say that they didn't know that this would make small banks riskier before their vote. They all knew, and they voted yes anyway. But the bank party doesn't stop with the little guys. Nope, the big guys got in on the rule burning too. In fact, current chairman of the Federal Reserve, so basically the current king of all bankers, said that this section I'm about to tell you about is, quote, the most significant piece, unquote, of this new law. And so here's Senator Elizabeth Warren of Massachusetts, an expert in the financial crash and its aftermath, with some backstory.
10 years ago, a bunch of enormous banks got giant bailouts, while American consumers got a punch in the gut. The excuse in Washington was, well, these banks were so interconnected with one another and with the overall economy that the failure of one could bring the rest of the system down too. Too bad, they said, we just have to bail them out. Individual families, however, could be crushed underfoot. They weren't big enough to be worth saving by Congress. Congress passed the huge bailout. But to keep this from ever happening again, Congress decided to put the small number of American banks that controlled more than $50 billion in assets, this is about 40 of the largest banks in the country, to put them on a watch list. Those banks would be under tougher federal oversight and would be subject to some stronger rules to stop them from bringing down the economy again. A small bank in Adams, Massachusetts would be regulated one way, and a giant bank with offices around the country and around the globe would get a much closer look. That makes real sense. If this bill passes, Washington will scrap those rules for 25 of those enormous banks. Under this bill, a bank that controls up to $250 billion in assets and has offices around the country and around the globe will follow the same rules and regulations and same oversight as a tiny little bank in Adams, Massachusetts.
Now, what she's referring to is a provision that says that by the beginning of 2020, the threshold for a bank to be subjected to stress tests and extra requirements for holding onto actual cash will be changed so that the only banks subject to those regulations are one with over $250 billion in assets, as opposed to the $50 billion threshold enacted by Dodd-Frank. This provision also changes the frequency of stress tests, which judge whether banks have enough cash on hand to handle a crisis. For the 13 U.S. big banks with over $250 billion in assets, instead of having to have stress tests semi-annually, so twice a year, they'll have to have them periodically, which could be as little as once every 3 years. It also reduces the number of scenarios that they have to test from 3 to 2. Now, these tests are supposed to show how the banks would be able to handle a crisis, like a run on a bank. And reducing the number of tests and the number of scenarios makes it much easier to miss any problems that exist or to ignore the problems that are known. The CBO says that this provision, quote, would result in fewer assets being subject to enhanced prudential regulation and thus increase the likelihood that a large financial firm with assets between $100 billion and $250 billion would fail, unquote. Again, they've all known this since March. And like Senator Warren said, that change is going to eliminate those requirements, enacted to prevent another global crash for 25 of the 38 largest banks. And these are not small banks. These are banks large enough to own stadiums. For example, Citizens Bank, which owns the Philadelphia Phillies Stadium, will now be regulated like a small bank. Comerica, which owns the Detroit Tigers Stadium, will now be regulated like a small bank. M&T Bank, which owns the Baltimore Ravens Stadium, will now be regulated like a small bank. SunTrust, which owns the Atlanta Braves Stadium, will now be regulated like a small bank. But these are not small banks. And it's not like they've just earned our trust back since the crash. Let's take SunTrust, for example, the bank that will now be regulated like a small bank, which owns the Atlanta Braves Stadium. Here's Senator Warren.
SunTrust has $208 billion in assets, and so would be deregulated under this bill. They would be cut loose. In 2014, SunTrust agreed to pay $320 million to settle claims that it misused bailout money that was supposed to help distressed homeowners. The law enforcement agency that led this investigation said that the bank literally took homeowners' applications to modify their mortgages, tossed them in a room, and ignored them. There were so many applications that the floor in that room buckled under the weight of the documents. Think about that. They got almost $5 billion in taxpayer bailout money. They promised to help homeowners, and then they just tossed application forms for that help onto a pile that it was so big that it made the floor buckle. And now this Congress is offering to help loosen the oversight on that bank.
They didn't just offer, they just did it. And here's another bank that is now going to be regulated like a small community bank. Here's Elizabeth Warren again.
Ally Financial has $164 billion in assets. They would be cut loose by this bill. In 2013, Ally Financial paid $98 million to settle charges that it discriminated against minority borrowers in providing auto loans. The scam was actually pretty straightforward. Charge African Americans and Latinos more than white people. The scale was huge. 235,000 non-white borrowers paid, on average, $200 to $300 more than white borrowers with similar credit profiles. And now, this Congress is offering to help loosen oversight of this bank as well.
Didn't offer, actually did it. And this law actually addresses that particular scandal too, because that's not an isolated event. Another company that's been caught discriminating against minorities is Vanderbilt Mortgage, the company owned by Berkshire Hathaway that offers high-interest predatory loans to manufactured homebuyers. In 2015, it was reported in the Seattle Times that Vanderbilt Mortgage was charging black people who make $75,000 a year the same rates as white people who made less than half of that, $35,000 a year. And we only know this because federal regulations required that banks making higher price loans have had to give us data about the interest rates they are charging people. And while this new law doesn't apply to Vanderbilt Mortgage specifically, what it does do is it exempts banks and credit unions from reporting data about credit scores, debt-to-income ratios, and loan-to-value ratios of their loans if the bank issues fewer than 500 loans per year, which includes 85% of all banks and credit unions. Now, Vanderbilt Mortgage and Ally Financial both offer more loans than that, which is why this won't apply to them. But the point is that the way this law helps smaller banks, as in 85% of all banks, is that it makes it easier for them to get away with charging minorities higher rates than white people. Because just like with the omnibus environmental provisions that I talked about in the last episode, the theory behind this is that if you don't have data documenting a problem, then the problem doesn't exist. The reason this works here is that 85% of banks will not have to report this information about the loans they offer, even though they collect this information anyway. But by not handing it over to authorities, and therefore the public, patterns of discrimination will be harder for citizens, lawyers, and law enforcement agents to spot, which makes it much more likely to happen. So banks get caught discriminating against people based on race. So the 115th Congress, including the entire Republican Party minus Walter Jones, decided to pass a law making it harder to catch the discrimination. This law passed the House of Representatives on its own in January of this year, with Again, all Republicans voting yes except for Walter Jones, and the vast majority of Democrats voting no, with 9 shameful exceptions. But the original version was written by Representative Tom Emmer of Minnesota's 6th District, which is right in the middle of the state. This pasty white man who thinks that the solution to discrimination is to sweep it under the rug is available for firing in November because he has decided not to run for governor and is running for a 3rd term in the House. Minnesota, if you want to prove that y'all aren't racist up there in Whiteville, you might want to boot him out on his ass. Moving on, longtime listeners should remember that in 2014, there was a bill that was snuck into law over the objections of President Obama as a dingleberry on the 1,600-page government funding law of that year, which was written in parts word for word by Citigroup lobbyists. That law gutted the so-called push-out rule, which said that banks, if they want to gamble with their money, our money, would have to create separate entities for that behavior that are not insured by the government. The government insurance is meant for our deposits, our savings, not for banker gambling designed to increase their business profits. But Citigroup got their paid-off members of the 114th Congress to gut that provision via dingleberry to a funding law. And so now they're allowed to gamble with our deposits, and our taxes are once again available to the bankers if their bets don't work out. Oh, and by the way, that goes for foreign banks too. But Citigroup wasn't satisfied. They want more. And so in mid-January of this year, Citigroup's chief financial officer, John Gersbach, told reporters that he wanted Congress to eliminate even more rules that govern what banks can do with our money. Specifically, Citigroup wanted Congress to change the supplementary leverage ratio, which is fancy banker speak for the amount of money the bank has to actually have, money the bank has to hold on to and store, and therefore can't lend out or gamble with. The banks want to be able to gamble in the stock market with as much money as possible. And so that's the main favor that they decided to push this bought-off 115th Congress to make happen. Because apparently, the requirement to actually have 5% of their money in their actual bank is too burdensome for these greed monsters. The banks are arguing by making them hold on to 5% of their money in case, a bunch of us peasants decide to withdraw our money at the same time or something like that. Well, the banks are saying that the requirement to hold 5% reduces their earnings.
Oh, but baby.
And they say that holding on to that money and therefore not being able to lend it out with interest hurts the entire economy, which, of course, is bullshit. As far as the bank's earnings are concerned, in the first quarter of this year, Bank of America, Citibank, JP Morgan, and Wells Fargo reported their best earnings in a decade. So they're doing great, even with the burdensome regulations. And as far as lending to us peasants is concerned, we are taking on more and more debt every month, which, while fiscally dangerous for us, is also great for the banks. Even better for the banks is the fact that business debt, business loans issued by banks, are at the highest point they have ever been since the Federal Reserve started tracking business debt in the 1940s. In fact, I personally believe that corporate debt will be at the heart of the next financial crisis, as corporate debt has been rising faster than peasant debt since 2009, since the mortgage-based financial crash. And when the next crash happens, remember the name collateralized loan obligations. Remember how during the Great Mortgage Scam, the bankers were packaging bundles of mortgages, some of them good, some of them garbage, and selling them to each other, eventually causing the entire financial system to crash? Well, collateralized loan obligations are just like that, except that instead of bundling together mortgages, they're bundling together giant business loans. So it's the same type of scam, but bigger. What could possibly go wrong? But, where was I? Oh, yeah. The point I'm trying to make is that the banks, large and small, are lending out shitloads of money and are damn near all profitable. In 2016, banks hauled in over $171 billion just in profit. And so requiring them to hold on to 5% is not breaking them or our economy, clearly. But not requiring them to have that small percentage of actual money could end up breaking us all. The truth about the bank's desire to lower the amount of money they have to actually hold is that this is banker greed, pure and simple. They want to be able to take as much of that safekeeping money and put it in shareholder pockets. They want to create more debt for businesses and people so that they can earn more interest and put more money in shareholder pockets. It's all about funneling as much money as possible into shareholder pockets. And please never forget that as of December of last year, 2017, the richest 10% of Americans own 84% of the stock market. So all policies designed to put money in shareholder pockets are designed to funnel more money to the rich. Yes, you might get some of the crumbs in your 401k when the banks do this, but the vast majority of the stock market money goes to the rich. It's a fact. But man, was it a brilliant move to convince the baby boomers to put their retirements in the stock market casino. So many people support anything that continues this stock market is the center of everything scam economy just for the crumbs they get in those 401k funds. Ugh, and my entire generation, we're now stuck with no choice except to never retire, which is pretty much my financial plan. But anyway, back to S2155. The original version of this bill did lower the amount that some banks would have to hold on to, but it was only supposed to be lowered for custodial banks, which are banks that generally don't make loans to peasants, but are instead banks where rich people park their money. But it really would have only benefited two U.S. banks, State Street and Bank of New York Mellon. But after aggressive lobbying by people paid by Citibank, the final version of this law changed the definition of custodial banks so that just about every bank that exists now fits the definition. And so now that every bank fits the definition of a custodial bank, what this law then does is it allows custodial banks, so all banks, to have the money that they have stored in the Federal Reserve or other central banks be omitted from the calculations for their supplementary leverage ratio, which is the amount of money they have to actually hold on to, which allows the banks to cook the books in order to hold on to less money. Now again, this is a huge favor to the big banks, and this was lobbied for hard by Citigroup. And people affiliated with Citigroup for this upcoming election alone have given almost $1 million already directly to candidates, including over $42,000 to Kevin McCarthy, who is likely to become the next Speaker of the House if we're dumb enough to allow the Republican Party to keep control of the House of Representatives for the 9th and 10th year in a row. Even worse, there are 21 members of this Congress who have money on Citigroup in the Wall Street casino, meaning that they directly profit from the Citigroup-friendly policies that they can get enacted into law. Out of those 21, only 6, all Democrats, voted no against their own financial interest. For this upcoming election, Citigroup has also spent over $5 million on lobbying for this and other corporate favors. And 32 out of their 40 lobbyists used to work in the government they are now paid to influence. Citigroup's lobbyists include former Congressman Jeff Davis, former Congressman Robert Livingston, Representative Pete Olson's former Chief of Staff, Representative Steve Pierce's former Chief of Staff, Senator Chris Coons' former Chief of Staff, Senator Rob Portman's former Chief of Staff, and the former chairman of the FDIC, which is the agency that ensures our deposits with tax money in the case of bank failures. No wonder Citigroup is getting everything they want. But it wasn't just Citigroup. Lobbyists from 215 different organizations registered to lobby on this bill. And a longtime supporter and friend of this podcast, Karen Suhaka of Bill Track 50, sent me an interview with one of them. And I want to play some of this for you guys so you understand how this process works, because it was enlightening for me. And thank you, Karen, for sending me this video. But what I'm going to play for you right now is portions of an interview with a lobbyist about his attempt, his strategy, for getting a dingleberry attached to this law. In the end, he wasn't successful, but this interview is a fascinating look into what goes on in the halls of Congress, as it's a conversation between two lobbyists as they talk shop. This interview was aired on a relatively new YouTube show called Laws and Sausages, hosted by lobbyist Brian Trasher. His video has only 90 views, and it's been out for 3 weeks, and so this is about as under the radar as it gets. And in this episode, lobbyist Brian Trasher interviews another lobbyist, Jeffrey Taylor, who is phoning in from his car. And Jeffrey Taylor has a long resume in Washington, D.C. In the 1980s, he was appointed to the Health and Human Services Agency by then-President George H.W. Bush. In the 1990s, he was chief of staff to Representative David McIntosh, who is a Republican from Indiana. More recently, he's been the managing partner at USGRI, which is a lobbying firm, and he manages 2 LinkedIn communities of lobbyists, one domestic and one international, with tens of thousands of lobbyist participants. This guy is like a lobbyist hub, and he's been working on trying to get a dingleberry attached to this law. Oh, and by the way, his going rate on Upwork is $250 an hour. And so the bill he tried to unsuccessfully get attached to the new law is H.R. 477, which essentially gets some bakers out of registering with the Securities and Exchange Commission, gets them out of registering with the Wall Street Police, and with complying with some regulations. But this really isn't about what his bill does, although it's clear that he's working for the bankers. It's more about the strategy that he's using to get his bill into law. So the bill he's working on had passed the House unanimously earlier this year. And so here's lobbyist Brian Trasher asking lobbyist Jeffrey Taylor how he got that done.
Well, you're right. It is rare to get a unanimous vote in the House unless it's to rename a post office or something. To what do you credit your success in getting that unanimous vote in the House? Was it because of the two high-profile sponsors, bipartisan sponsors, who latched onto the bill?
Well, Maxine Waters didn't latch on right away. And in fact, when we made it through the committee, it was still a bipartisan bill. I think it was split right down the middle, although you could tell that there were a number of Democrats on the committee that liked the bill, but it needed some corrections. And at that point, that's when lobbyists come in and say, okay, Congresswoman Waters, this really is dead in the Senate if we don't have some kind of bipartisan support in the House. And so we sat down with her team and said, all right, let's go through the bill line by line, and we'll bring in our experts and you bring in your experts, and let's really tear this thing apart. Obviously we can't bring Democrats on if we all of a sudden equally lose Republicans. So where can we find that sweet spot? And her staff was very accommodating. Here are the three areas, Jeffrey. What can you do that doesn't, harm the overall bill? And we were able to tweak each of these areas. And at the end of the day, to Congresswoman Waters' credit, she said, done. That's a good bill now. We went to the floor. Mrs. Waters spoke on behalf of the bill. Chairman Henseling spoke on behalf of the bill. And boom, 426-0. It can still be done. You can still find the happy medium. The problem is it's much more difficult in the Senate. Everybody thinks that the House is the more partisan. In fact, there are a lot of bills going from the House to the Senate. It's in the Senate where things are not even getting hearings and trying to get to the floor of the Senate for a vote.
But there was one thing in particular that he said pushed his bill forward towards passage in the House, and here's what it was.
Well, again, that's the other thing, trying to get on try to get support for your bill from the industry associations and the think tanks that weigh in on these kinds of things. Early on, we had, the more free market, free market like the Chamber of Commerce and other financial services groups. But a little later in the process, we also had on a group that is considered left of center, the National State Securities Secretaries Association, called NASA. And the minute they came on the bill, Katie barred the door. All of a sudden, a number of Democrats had to say, well, if they're on the bill, there must be some merit here. And that's actually when we started to have more dialogue on the left, trying to make this a bipartisan bill.
So an association that none of us have ever heard of is on board, and wow, the Democrats now are too. And so here's what happened from there.
When you have NASA and the U.S. Chamber, you're now covering the waterfront on the political spectrum. And we were able to move forward. There are some people like Senator Warren that you will never get because they believe in, highly regulating the financial services. And you can talk to Senator Warren and her colleagues all you want. You kind of know at the end of the day, we tried, but we know we'll never get there. But there are others like Senator Heitkamp, Senator Donnelly, Senator Warren that there's a good chance because they're pro-business Democrats that maybe we can get them on board. And then once we get one or two on board, others will come on board because they trust their judgment. So it's all putting a puzzle together. And you're absolutely right, finding the outside interests that are trusting to Democrats and are trusting to Republicans. And we were able to do that.
So outside interests are essential. They're key here. And while he was talking, he said obviously that Senator Warren, which I think surprises none of us, was not playing ball. But he said there are others like Senator Heitkamp, Senator Donnelly, and I'm pretty sure he meant to say Senator Mark Warner. He said Warren, but it's definitely Warner of Virginia, because that is a guy who's always been a let business regulate themselves kind of guy. And he, along with Heidi Heitkamp of North Dakota, Senator Joe Donnelly of Indiana, and Jon Tester of Montana, they were Democrats that not only supported the bill, but helped the Republicans write it and get other Democrats to vote for it. which was essential for passage in the Senate. According to the Center for Responsive Politics, which is where I get all of my information on these legal bribes, Donnelly, Heitkamp, and Tester, who are all up for re-election and or firing this year, they have each taken between $140,000 and $180,000 from the financial industry for this election. Each of them has taken that much money. In fact, Democrat Heidi Heitkamp, who got the $180,000, has taken more money from affiliates of the commercial banks than any other senator for this election. And even though he's not up for re-election this year, Senator Mark Warner also received over $67,000 from people associated with the commercial banks. And so it should come as no surprise that Democratic Senator Mark Warner is personally responsible for a favor to the industry that got put into this law, specifically a favor to a bank called Promontory. Mark Warner's provision has to do with what are called broker deposits. Essentially, each of our normal bank accounts are insured by the FDIC. So if your bank disappears, up to $250,000 in tax money will be used to replace your account. Now, that's more than enough for most of us, but for rich people, they have to spread their money around to different banks to get it all insured. And when you have shitloads of money, this can be difficult to keep track of. So there are banks, specifically Promontory, which is the biggest player in this game, which specializes in and gets paid in fees for helping rich people game the FDIC limits by spreading their money around to a bunch of different banks for them while letting the rich people control all their money via one account. These types of accounts are called broker deposits. And these types of deposits are kind of dangerous for the banks as the money can be moved suddenly and in large amounts. Because of the added risk to banks that accept these runarounds to the FDIC rules, the FDIC required that banks that take these deposits have to hold on to more money in case of, whatever kind of crisis. But the bill Democrat Mark Warner of Virginia wrote and successfully got included in the new law frees banks that accept these broker deposits from having to hold on to more money to make up for the risk that these accounts pose to the banks that accept them. Which helps us on Main Street. How exactly? Because from where my peasant ass is sitting, it appears that this provision makes the bank where my money is held more susceptible to failure. Also that rich people can spread their money around in order to get full taxpayer bailouts when their greed destroys the banks again. That doesn't protect this consumer and the billions of people like me. It protects the few at the very top of the global wealth scale. The people with so much money that they need multiple banks to hold it all. Which brings me to, what the fuck do we do about all this? Every week on this podcast, I have been documenting the Republicans, really. We can't blame the Democrats for all of this. Although I guess we can, because that was fucking Senator Mark Warner. What I'm documenting is Congress, the Republican Party in whole, and the Democratic Party in part, doing horrible things to us week after week after week. And I think it's no secret that I've been struggling with my purpose for this podcast lately, because I really don't know what I think I'm going to accomplish in the big picture sense by doing this, because I know I'm making myself crazy. And I know that the audience is too small to make any kind of difference. And so I've just been trying to figure out, what am I doing this for? And I've been leaning towards the mentality that I'm doing it just so that our small group of Americans who are lucky enough to know that Congressional Dish exists will know what's happening, and we'll be able to prepare ourselves accordingly and hopefully come out a little bit ahead as the world burns. That's the most likely scenario here for any good that I'm doing. But the thing is that I still have that thing inside of me where I want to fix it. I want the world to be a better place. I want Congress to work for us. And like Senator Whitehouse said right now, it's just not. And this new law couldn't possibly make that any clearer. They're risking our money, quite literally, in so many ways, so that all of the already obscenely profitable bankers can profit even more. And you just heard the details. And yes, I'm not holding back my disdain for this bill, but the details, they speak for themselves. These are favors to the bankers. These are favors to the rich. And in a lot of ways, it makes our finances riskier because we're putting our money in these banks, And so what are we supposed to do? This all just feels too big. The past few months, I've been focusing a lot on the wars, which feels out of control. And I talked about the environment, which is being destroyed, especially for fossil fuels, which feels too big and out of control. Now we have these fucking bankers that are getting whatever they want, which feels out of control. What do we do? This is all useless if we don't figure out what to do. Which is why I was so fascinated by the speech that Senator Whitehouse gave, because I think he has a plan that we can get behind. No matter if you're loyal to a political party, which I don't know what you would be, but like fine, if you think that you fall somewhere on the red-blue divide, like whatever. But this is a plan that I think all of us that are workers, all of us who are customers, all of us who aren't the titans of industry, I think this is a plan we can all get behind and narrow our focus on and work towards, and a plan that could actually work if we all just start looking in this one direction. But the first step to fixing a problem is to diagnose it. And so here's his diagnosis, which I agree with what our true main number one problem is.
I think what has very clearly happened is that unlimited money and its nasty big brother, unlimited dark money, have showed up since the Citizens United decision and basically driven Congress into a state of servitude to those who have the wherewithal to engage with us with all that dark money.
And can any of us really disagree with that? Even when I'm doing episodes like this, I have to hedge what I'm saying with affiliates of this company have contributed blah, blah, blah amounts of money. But I don't really know who they are. And then there's the truly dark money. And there was an episode, the John Koskinen one, the impeachment of John Koskinen. I went deep into explaining that the money that goes to 501c4 social welfare organizations, well, they're not really social welfare organizations. These are groups where donors can spend enormous amounts of money on influencing our politics and remain secret. The billions of dollars that get funneled into these secret groups. These groups then buy television and print and internet ads to influence our votes in the elections, and we have no idea who is funding those. We don't know if they're telling us truth. We don't know if they're telling us lies. We don't know what their motivations are because we don't know who they are, and no one can check. That's as dark as money gets. And the winner in this dark money game, obviously, is the Republican Party. The dark money goes to serve corporate interests, and they have all the big money, the corporate interests do. And the Republican Party has been fully captured by corporate interests. I've documented it now for almost 6 years, and it's not like they're hiding it. Every Republican except for Walter Jones voted for this clear, reckless corporate favor of a law. And that pattern has continued over and over and over and over and over again with all these laws that I've read for 6 fucking years. At a certain point, I try and be fair here, and the only fair thing to do is call it like I see it, which is that the Republican Party serves the corporate interests. And like I said, they're not hiding it. If you just watch C-SPAN on your own for an hour, you'll hear every Republican argue the case from the side of the business owners. They call the business owners job creators and entrepreneurs, but their arguments are always from the perspective of the business and the business owners, and their laws have been consistently benefiting business owners no matter how many workers and customers get fucked. And yes, Democrats get money too, but there's no way that Democrats or any other party that wants to fight these corporations rigging the laws in the corporation's favor can win by out fundraising the Republicans. You can't. The entire party has been captured. It really has. And here's the thing about the money. The companies that are giving this amount of money to the Republicans and the corporate Democrats, these companies profit from their efforts to influence our politicians and our elections. $5 million in lobbying by a subsidiary of Berkshire Hathaway and Friends leads to laws that allow over $30 billion in profit in one quarter. That's an incredible return on investment. But for those fighting this, even the billionaires, there's no financial return. Billionaires make less money if customers and workers win. And so most are not on our side. And the few that are, they lose money every time they put their money towards these causes. It's a more of a deal of like, I want the world to be a better place, so I'm going to give some money, but they don't get money back for that. And so there's no way without that financial return that we're going to fight this by just out fundraising them. We're never going to out fundraise ExxonMobil and the bankers. And it's just not going to fucking happen. But what we do have are our numbers, because there's way more of us than there are of them. There are way more workers and customers than there are business owners. And our votes determines who makes the laws. But what we are lacking, we as in workers and customers, what we're lacking is a lack of focus. When I sit back and I think about my frustration with the women's marches, it's the lack of focus that really got me. What the hell were they marching for? And when I look at my frustrations with living in the Bay Area, part of it is that we have all these super passionate people, passionate about their individual issues, but they're so passionate that no one is working together. Everyone's doing their own thing. And we end up with an area that has inconsistent public transportation, filthy streets, and tent cities on every other block, with more popping up all the time. Everyone is focusing on their own the thing that's most important to them, and nothing is changing for the better. We need one thing to rally around. One thing that can unite us all and open up all of our issues to positive change. And Sheldon Whitehouse convinced me this week that money, dark money in particular, that could be it. That should be it.
This is like the Death Star. In Star Wars, they didn't go fight the evil empire on every single planet. They went after the Death Star. And once they won the Death Star, everything else moved, in a better direction. If we can solve the dark money problem, then we can start to win on pharmaceuticals, on Wall Street, on environment, on fossil fuels, on a whole variety of other issues. And that's why they fight so desperately to protect us, because they know it's their Death Star too.
And that makes so much sense to me. That's the thing that ties all these issues together. Whether it's wars or banker greed or pharmaceuticals or fossil fuels or prison for profit or homelessness or workers getting paid so little they need food stamps. All these healthcare, which we can't get because it's, a for-profit thing. All these issues are connected in one way, which is that the bad policies creating these issues are paid for by the companies who profit from them, either with direct legal bribes to candidates or via lobbying and influence ads paid for by only God knows who in these dark money organizations. Now, we know that Wolfpack has been trying to get a constitutional amendment via the states to make the unlimited spending on elections illegal, and it's an effort worth supporting for sure. But we also get to vote. And I know a lot of us don't really want to join things. I'm not much of a joiner myself, which I guess is kind of one of the reasons I started this podcast. It's like, what can I do every single day as an individual to at least focus my energy in a way that might make things better? And so what I'm thinking is, individuals, if each of us make this our number one issue, in order to make, the changes to our personal number one issues possible, we could elect a Congress that would pass something like the Disclose Act.
The Disclose Act, requiring transparency for all political contributions, is permitted by the Citizens United decision. And if you live in a tropical climate and go into the kitchen at night and turn on the light, you will often see cockroaches skittering for the shadows and for the corners when you turn on the light at night in the kitchen. In the same way, you turn on the light of disclosure, and I think a lot of the cockroaches skitter for the shadows, and probably, in my guess, 2/3 of the unlimited spending supported by Citizens United goes away when it's not anonymous any longer.
I think it's an idea worth trying, because making the funding illegal, that's going to be really tough to convince the bribed people to do, and we're not having that much success going through the states. I just don't see that movement getting any bigger. In fact, I haven't heard anything about it for way too long. But if we were to elect people in November, or maybe even 2 years from now, but eventually, but starting now, if we make the refusal of corporate contributions the key qualification for earning our votes, a bill to simply require names to be publicly matched to donations, I don't think that's impossible at all. And there are people on the Republican side, even ones in this current Congress. I'm thinking Rand Paul, Justin Amash, Tom Massey, Walter Jones. These are people who may be willing to help too, because they're aware that this dark money racket exists and they are pissed about it, especially in regards to how it influences our country's decision to wage wars. And as far as the red-blue divide is concerned when it comes to us peasants, I don't think it's real. I've said that so many times. But I think that the vast majority of us don't think that rich people should get to buy our politicians. This is something that I don't care who you are or where you live or what you think about individual issues. I think most of us agree on this. And so dark money, the corporate bribery, legally overt and secret, that's the rot at the core of all of our problems. Every one of them. That's what makes bills like this one a recurring theme on this damn depressing podcast. Dark money is the Death Star. And Sheldon Whitehouse in this next clip, he frames his message to his party, the Democrats. But I'm not a Democrat. I'm not a Republican. I've never been a member of, well, I guess I was a Republican a long time ago, but I'm not a member of these parties. I'm really angry at both of them. But listen to his overall theme, because I think it's really important to all of us that want laws that are fair to workers and customers. A world that doesn't revolve around allowing the rich to collect all the money in the world for themselves. So here we go.
The dark money operation is all over. It is after us in elections. It is after us in administrative agencies. It is after us with lobbying in the halls of Congress. It is after us in all these different ways I've just described in the courts. We are taking essentially dark money artillery fire every single moment on multiple fronts. In artillery, there is a thing called counter battery, where you fire back at the artillery that is firing at you. That needs to be a priority for Democrats. We need to make sure that the spotlight of disclosure is on these webs, on these networks, focused on the special interests behind the front groups, focused on the creepy billionaires who are spending this money so that the American public sees what is really going on. That is our job. And every day that we are not doing that job, we are losing and we are failing in our duty to this country.
Now, I do have to point out here that should be a priority for Democrats if they truly want to be the party of workers and customers. But right now, there are too many of them. 17% of them in the House, as you heard, that voted for this horrible law. And then there were, 16? Yeah, 16 of them in the Senate that voted for this law. So the Democrats also have to clean up their own fucking house and stop being beholden to the special interests before they can unite together and be the party that would fight for us. And so that's the problem. We have the Republicans that are fully captured by the corporate interests and the Democrats that are too captured by the corporate interests. But people like Sheldon Whitehouse are Democrats. And so if there's hope in either of the big two, I'm sorry, that's where it lies. That's where it lies for me. I have to go with people that say stuff like this when they don't think anyone is watching. But that's what each one of us can do, In our own ways, we can fight the Death Star by sharing any and all information you get that exhibits how dark money is influencing what our government does. And that might include sharing episodes of this podcast, but it also, let's say that there's something in this episode that really caught your attention. Go to the show notes, find that article, share that. Start this conversation. In conversations between you and your friends and you and your families, you can steer these political conversations back to the money. Make that your goal. Don't let the other participants ever forget that everything that bothers them about the U.S. government right now can be traced right back to the money. And like I said, use the show notes to help you. That's why they're there. And most importantly, you can use your vote. Because instead of voting based on party line, we could vote based on money. If one candidate is spamming your television, radio, mailbox, and Facebook feeds with ads, well, they've probably been collecting shitloads of money to be able to afford that. That should be a disqualification for your vote. Look up your candidates on openSecrets.org. He or she who accepts the least amount of corporate cash wins. And what's cool and what I'm witnessing every day is a small tide is already turning in this direction. We're seeing more and more candidates running on the idea that they won't accept corporate donations. And so by showing up and voting based on the money and opening your mouths and telling them that that's why you voted for or against them, that's how we make it clear that we are coming for the Death Star and we intend to blow it up. Each one of us can do something to fight the dark money Death Star every single day. Because as you heard in this episode, and so many others going back to the very beginning of my podcasting adventure, the laws that are passed that seem to make no sense because they hurt or put at risk the vast majority of us and our savings, those laws make a lot more sense when you look at the money being funneled towards the people making the laws. We need to be able to look at all the money. That's the first step. And it's one that we have no choice but to eventually achieve. And I also want to make one more point about the dark money, which goes to the heart of why I want to keep this podcast forever ad-free. Because where does the dark money go? Hell, where does the light money go? Well, it goes to campaign contributions. It goes to the social welfare organizations which hide their donors. But once those organizations get it, once the candidates get it, where does it go? What do they use it for? Well, we were told by candidate Jessica Morse around Christmas time, what the candidates use it for is advertisements. They use it for advertisements to influence you. Every channel that runs a campaign ad or corporate ad is tainted by the same money that is ruining our political system. Big money donors give the maximum allowed to campaigns and then spend unlimited amounts on groups that allow them to keep their identities and political spending secret. And then the campaigns and the creepy groups spend that money on ads. Their ads pay the salaries of all the millionaires that filter the news on the television and the radio and in the newspapers and in the magazines. It's ads that make candidates and the creepy groups, the television stations and the newspapers and the radios and the magazines and the podcasts even. That makes the candidates and the creepy groups, those media outlets' true customers. It's not you. Access to you is what they're selling. And I'm not selling you, and that's on purpose. Aren't you tired of people selling your time? Especially knowing that the money being paid for your time is literally ruining our country? Because that's one of the reasons why supporting Congressional Dish is so important. Because you don't have to agree with me on anything. I've never made that a requirement. But at least I'm telling you this stuff. At least I'm looking into the money, shining a light on the Death Star and telling you you're under attack. Can you say that for anyone on the television, at least in the corporate media right now? Seriously, who told you about the details of this new law? You may have heard about who voted for it and who gets credit, but who told you about what it actually does? Has anyone else told you about the credit freezes, which by the end of this year, you'll be able to put on your accounts for free at all 3 credit reporting agencies? Has anyone else told you that manufactured home sellers can steer you to certain loans in the same company that they work for and get paid to do so? That's information that can come in pretty fucking useful and actually save you a lot of money if you or someone you love wants to buy one of those things. There is important, actionable information in these laws, but no one on TV is telling us. And why? Because they get paid via advertisements by the politicians who did this and by the banks who paid them to do it. The people who accept ads are all riding on the Death Star. They're a huge part of the problem. And so on this podcast, which I do full time, it's my career. I'm practicing what I preach. F the Death Star and everybody on it. I'm with you. I'm not selling you. I believe in you, which is why I'm literally putting my personal and business income in your hands. I trust you, and you haven't been letting me down. It's been almost 6 years, and I've been able to keep doing this podcast, and I'm getting a lot better at finding this information with all this practice, and I'm going to keep getting better at it. And the reason is because of you. You are a huge part of this effort. And so if you believe in this podcast, in what I'm trying to do here, in the same way I believe in you, please support it and this business model, the honor system business model that lets you determine how much you pay. And there's a lot of different ways that you can pay for this podcast. All of them are listed for you on the support page on congressionaldish.com. But you can send checks to the Congressional Dish address, which is in Florida. You can send checks monthly, which a lot of people do, or we have people that do biweekly or weekly, whatever you want. You just set that up with your bank's online bill pay function. And then you can also send checks whenever you feel like it for whatever amount you consider fair. On the same line, there's also Zelle, which is a great free service that sends money directly from your bank account to my bank account. You can send that to the email address donation@congressionaldish.com. There's also Patreon, where I'm now putting extended thank yous because I thank everyone who contributes to this podcast, but I'm doing those with friends now, and sometimes we just have conversations that have nothing to do with anything that I don't really want the whole internet to get. But because you are a part of this with me, I'm willing to let you more into my personal life. And so that's all available to the people that are contributing on Patreon. And then, of course, if you're contributing in any other way, you also have access to that, but you need to email Lauren@congressionaldish.com to get those files. And that's a per episode thing. So you can use your credit or debit card to contribute per episode on Patreon. But if you want to do per month, you can also use PayPal. PayPal allows you to contribute whenever you feel like it. And on a monthly basis, you just check the Make It Monthly checkbox underneath the amount that you choose. There's also Venmo, which you just send it to Jennifer-Briney. And I love those because I can hear it on my phone. It goes ding. And I know that someone likes my podcast. It makes me feel great. And I also accept a bunch of cryptocurrencies. So any way that you choose to contribute is great. And whatever amount that you can contribute and you think is fair is great, as long as that amount is more than zero. And, I know this podcast is tiny in the grand scheme of things. And I know my voice is not loud enough, at least not yet, maybe not ever, to really even put a dent in the Death Star. But with your help, we might be able to change that. You can support the podcast financially, obviously. But you can also tell your friends about the podcast. You can use the show notes to give them the information that I found. You can make posts about this information on the internet. And, there's so many different ways that you can help. And I guess what I'm trying to say is that we're not completely powerless here. we can try this and you can help me. And I definitely need you to. And then maybe someday down the line, maybe we can get enough people listening to this information that we can dent the Death Star. Wouldn't that be fun? But for now, you and I can at least document what the Death Star is doing to us in order to know how to protect ourselves and maybe even undo the damage in the future. And I know so many times that doesn't feel like much, but together, maybe we can make this into something bigger. And that possibility has got to count for something. And now I am sitting here with husband Joe Briney. We're on the couch, and we would like to thank everyone who's making this podcast and really our lives possible, considering this is how we pay our rent. And Joe, say hello.
Hello.
All right. What are you drinking? It smells like
bourbon.
It smells like bourbon. All right. So let's get started with subscribers. And we're doing really good on Patreon. I think people like hearing us talk without golf swings and about just bullshit that's happening in our lives, because Patreon is definitely seeing an upswing, which I think is pretty fun. But let's see. So first of all, I would love to thank Rob Rudolph, who's now contributing $25 an episode.
Nice.
Yes. Thank you so much, Rob. We're also getting $10 an episode from Cassandra Acella. Thank you, Cassandra. We're getting $5 an episode from Joaquin Camara. Thank you, Joaquin. $5 an episode from Todd Nolan. Thank you, Todd. $5 an episode from Austin. Thank you, Austin. Getting $5 an episode from a name I really love, which is Kid versus Vegetable. Which vegetable did you hate the most as a kid? What was your nemesis?
I think lima beans are pretty gross.
Really?
Yeah.
Huh. Yeah, you know what? There was one of those California veggie packs, and I liked everything in it. It was peas, carrots, corn, and then fucking lima beans just ruined the whole bag. So I see what you're saying.
Yeah.
But my mom didn't really buy those when she realized that we were not eating the lima beans. So we got out of that. Yeah, lima beans suck. So Briney's versus lima beans. We should make that a Twitter handle that no one will follow. So yeah, thank you, vegetable hater. And we also got a raise from James Chapko. This is a raise from $5 a month to $7.50 a month. This is a paper check. So thank you, James. I guess these aren't all Patreons. Yeah, these are subscribers. Subscribers are the best, man. These are the ones that let me budget. God, I love subscribers. So yeah, thanks, James. We're also getting $2 an episode on Patreon from Mark Kruger. Thank you, Mark. We're getting $1 an episode from Adam Selby, who I definitely know your name. I know he tweeted me today. I can't remember what he tweeted me about, but I remember saying thank you, Adam. He was either one that told me about the Cash App. A lot of people are talking about the Cash App. I think I'm going to have to sign up for that, whatever it is. And then also there are people that are helping me try to figure out how to get Twitter to stop giving me their tweets that they want me to see with their stupid algorithm.
I hate that.
I hate it so much.
I thought I turned off all the advertisements and all the emails, and I still get them.
Well, they're just doing that things you may have missed. And it's if I wanted to see it, I would have signed on earlier or suck that out. If you seek something in the past tense, how do you say that?
Seeked?
Seeked? That doesn't sound right.
Suck?
Suck? I don't know.
I don't know.
Well, I would have gone to that person's page and I would have looked at what they said if I cared if I missed it. But it keeps showing me the same people's stuff over and over again, and the chronological is just not happening. My favorite thing about Twitter is when something would happen, it would just be all these people talking about the same thing. You see the reaction in real time, and now it's completely ruined. So people are trying to tell me there's different apps and stuff you can use to make it go back to chronological, and there's ways to do it. But so far, straight up Twitter just doesn't have that setting, and it's making me very mad.
Yeah, and it sucks when you read an article from the AP, because then it'll be it'll give you related stories. And since the AP sends the same story to a bunch of different publications, it's links to the story I literally just read. Yeah,
at least it's exposing that, though, where all these different publications are just copying other places' content, or they're owned by the same thing. I don't know what the Associated Press is owned by, But back to the list. We also are now getting $1 an episode from Andrew Casey. Thank you, Andrew. We're getting $1 an episode from Russell Hugo. Thank you, Russell. So this counts as a raise. We're getting $1 an episode on Patreon from Andrew Conkling, but he's been contributing to this podcast for a very long time. And his note said, I'm contributing on Patreon to get the feed. This is added to my check contribution. That seems to come in my wife's name only, and I haven't figured out a way to change that, but oh well. But that's okay. Thanks, Andrew. And there's the proof that like there are people that want to listen to the unedited thank yous.
Yep.
So that's cool. At least people are enjoying it. Thanks, Andrew. We also are now getting $1 an episode on Patreon from Dr. Dexter Matroni. Love that name. And he said, hey, Jen, no need to reply. Just give this a read if you are keen on some feedback on where your listeners come from and what they like about the show. I've been listening to the Intercepted podcast with Jeremy Scahill for over a year now. That is one of my favorite podcasts. Do you listen to it?
No, I don't.
Add it to your list. It's so good. Every year for the Academy of Podcasters, I keep getting nominated for news and politics. Intercepted should be nominated and they should beat me. It's so good. Because Jeremy Scahill, you know who he is, right?
Yeah.
The author of Blackwater.
Yep.
He just knows shit. And so he's the one who's doing the podcast. But when he does these interviews, he just comes to the perspective of like, there's no partisanship with this guy. He knows what's going on in the world. Like, he's done his research. His questions are all intelligent. He doesn't dumb it down for people, but he knows how to explain things well. It's so good. So I love that podcast. But anyway, back to the note. He said, you've been listening to that podcast and we have a group of Intercepted listeners on Facebook that is quite active. I've asked around for recommendations of other podcasts and they mentioned you over and over again. That's like the best compliment ever.
Nice.
Yeah. If people that like Intercepted like Congressional Dish, I'm doing something right. So here I am, listened to a handful of recent episodes and I'm so glad I found you. I'm studying international, and to everyone who went to that Facebook group and told people to listen to Congressional Dish, thank you. That is awesome. Because God knows I'm not doing any marketing. Although I say that, but I'm going to LA tomorrow to do the Young Turks. I don't know how many listeners I get from that. We'll see, but I'm doing what I can. But really, people are finding this show because other people tell them.
Are you doing the show with Brett?
I don't know. I haven't. Last time I was messaging Brett Ehrlich, it was about beta breakers and we never met up because he was too hungover to go. And then I was too hungover to message him back. So I guess I'll find out tomorrow if I'm on it with Brett. But yeah, I don't know. That would be fun though. I hope I am. I love seeing Brett. Back to note. Said, oh, and for those of you who want to watch that episode, it's going to be the Young Turks on May 25th. It'll be the Friday episode. That's what I'll be on. So by the time you hear this, it will have already aired, but it should be for you eager beavers who listen to this episode right away. It should be the most recent episodes. And then if you want to check it out after, just look for the May 25th ones. Now back to his note for real. He says, I'm studying international and European law in the Netherlands, though I'm originally from Berlin, Germany. God, I love that city. I've also studied humanitarian law and tribal law for a while at the University of Bahir Dar, Ethiopia. I'm also aspiring to become a filmmaker. Cool. I just wanted to give you a shout out and tell you the two things I appreciate most about your work. Number one, sourcing. I study the law and sources are key in any kind of research I do. Duh. I'm constantly flabbergasted by the lack of sources that are provided in the media landscape around the world. Especially established news outlets keep making assumptions and setting up thesis after thesis without providing solid argumentation first in their publications. Thank you for providing your sources. I love to get lost in those rabbit holes that are opening up via your show notes. I love that he's using the show notes. And I've noticed that too, that the most like mainstream publications are the ones that never bother to link to where they're getting their information from. Like, it's getting to the point now that, I mean, that's one of my favorite things about The Intercept. Obviously, I'm obsessed because their podcast is good, but also the publication is great. They link to everything. They link to their work. They link to other people's work. They link to where they get their numbers from. They link to everything they possibly can. And I just think that's so important right now.
Yeah, definitely. It gives you credibility.
Oh, it totally does. And like I said, like, it's a pain in the ass to put together these show notes, but people are using them. And I do think that they're excellent openings for rabbit holes. That was saying that. She's the one she's my sister and she does the thank yous, but she did the show notes for years. And she was telling me that she used to love that because when she was putting all that stuff in order, she would get sucked down the rabbit holes. And she's never been curious on her own, I guess. But when it's thrown in front of her, like, she's super smart. So that's how she ended up down the rabbit holes. And I just love that that's happening to other people. It kind of makes me feel like mission accomplished.
Well, how many readers have you had before who said they didn't believe you when you said something and then they went to your website and found all the sources and were like, yep, I guess so.
Quite a few. And I think it saves me from a lot of the stupid arguments that can happen when it's like, that's not true. Because then I can just be like, oh, here you go. Here's the article that proves it. Here's the document. And now that I know how to because I figured out, it sounds so dumb. It's so easy. And I don't know why it took me so long to do it. But when you get a PDF online, all you have to do to make it go to a specific page number is you end it with the pound sign, then page equals, and then you put the page, and it'll jump specifically to that page. And so now that I'm able to do that, instead of just linking to a CBO report that could be like 100 pages long, I can at least get you to the right page to where you can find the information. So that's super valuable too. And I recently figured out how to do that. I mean, all I had to do was Google it years ago, and I never did. But better late than never. I don't know. But back to the note, he said, this is the things he appreciates about the show. He said, number 2, no ads. Ads are cancer, full stop. I loathe them. But I cannot seem to hide from them. I recommend The Attention Merchants by Tim Wu for an eye-opening read on attention as the currency of the information age. Since I put down the book, I try to just close my eyes all the time to avoid all the bullshit. I do that too. Do you just like avoid ads when you can?
Oh, yeah, absolutely.
I know that we both are in the habit of muting the television. It's one of my favorite things about Dom too. When we watch football at Dom's house, he is on it. The minute the commercials come on, mute. I love that so much. And when he walks out of the room, like I take over. It's excellent football watching atmosphere.
Well, and this is the guy from Berlin, right?
Yeah.
Like, remember when we came back from our vacation and the first thing that I noticed was how much we get advertised to?
Everywhere.
It was obnoxious. I just thought it was normal. And then when you go somewhere else and come back, like you realize.
No, it's not normal. That when I moved back from Europe, that was one of the things that struck me. And the other thing was how big our stuff is, especially the cars. I remember my parents picked me up from LAX and we were driving back to Orange County. And I was looking at the freeway and everyone was driving these giant cars. Like I think I was being driven in an SUV, but I just couldn't believe the gas guzzlers that were on this freeway that just, I had just stopped being accustomed to it when I was in Europe. It's just not like that there. But everything we do is big. Our houses are big. Our freeways are big. Our cars are outrageously big. But yeah, big stuff and advertisements, the American way. But back to the note. That's why I pledged $1 per episode on Patreon. I'm poor as shit at the moment and scrambling to pay my tuition fees. Yes, they are nothing compared to U.S. tuition, but I try to be financially independent of my parents and it's not easy. Hey, I totally got it. And I appreciate you contributing $1 an episode while in school. God knows I probably couldn't. There was a time where I was pulling change out of Aaron and Casey's couch to afford nachos at the 7-Eleven.
So foul.
Like that was me in college. Although we did find enough change once to get a box of wine. We got Franzia just with change in the couch. So that couch is just like a treasure chest of
wow.
But yeah, I know what it's like to be broke as shit. I was there. Back to the note. I know this is more of a gesture than any substantial contribution. No, that's not true. It adds up. It definitely adds up. If every single person that listened to this, did what you did and signed up for $1 per episode, we'd be in a better financial situation. So if it's substantial to you, it's substantial to me, and I appreciate it. Back to the note, but I just want to let you know we support you even over here in Europe. Please do not stop. Thank you.
Awesome.
Yeah, that does make me feel better. I've been feeling a little like I'm having an existential crisis lately with this podcast. Like, it's not solving anything. So what am I doing this for? This happens every few months, but I've definitely been feeling that this week where I've been just nonstop reading this stupid law, being angry and making myself crazy and not exercising and eating because I'm not moving. Like, it's just this, like, why am I doing it? But messages like that, that's why I'm doing it. You know?
Yeah.
So yeah, that was all our new subscribers. Thank you guys so much. I really appreciate your support. You guys are the reason why I know approximately how much money I have coming in. And speaking of subscribers, Stephen McMahon really should count. But I put him in the contributions because he just contributed another $115 check and more Veterans for Peace stickers from Haver, Montana. And his note this time says, Jen, more stickers enclosed. Your sister needs to share. The Weather Channel called Haver the city with the worst winter.
Oh, wow.
Yeah. Being number one sometimes sucks. Behind on listening to your podcast, trying to catch up. I still love that you keep me informed about the toads in Congress. Keep up the good work. Thanks, Stephen. Thanks, Stephen. Love to hear from you. And honestly, your stickers are better off with my sister because she has 2 little kids and they're going to paste them everywhere more effectively than I will. I mean, you let little Hannah be bad and put a sticker on it, she'll put 10.
Oh, definitely.
So that's a better strategy. It's good that they're going to Lauren. Let's see. We also got a $50 bonus from Brian Weiss on Zelle, and his email said, "Hi, Jen. I just finished 171, 2,232 pages yesterday, and I heard that payments are down. Well, I'm currently on the hook for $5 an episode via Patreon, but I decided to make a donation on top of that. As I turn 50 in April, I'm sending you a one-time payment of $50 in support of the show. Keep on keeping on, Brian." Thank you, Brian. That definitely helps, and happy birthday. We also got another Venmo from Chris Canfield, $25. And I just laugh when I see his name at this point because his messages are always funny. His note says, "For your serious show, I think you should have a premium membership for people to have the opportunity to join you on the thank you portion. I would definitely support that because it would be cool and I'd love to hear my voice." I bet you would, buddy. I could play it over and over for everyone I know. I could even put it on loop in my studio. You're doing awesome. The Pac-Man show was great and you did a great job. I think you're going to get offers from others and make big piles of money later. Check, all my best. Thanks, Chris. I really don't think the piles of money are coming, but that's okay. I'm actually quite happy just having this be my thing. But I don't know. How do you feel about having people I don't know do the thank yous? I think it could be chaos.
It could be chaos.
Could be boring. Although I don't know.
I mean, what's the worst case scenario? Is that you'd have to re-record it or something?
I don't know. Though. I mean, it's worth a shot, but I also don't want this to necessarily be like a pay to play thing where only the people that like, where do I draw the line? Because I know that there's people like our poorest European friend who's contributing $1 an episode, and like that's a financial sacrifice for him. But we might have people that are contributing $100 an episode that make a load of money, and it's like not really a sacrifice. So it's like, I don't know how to judge who should get to come on. I don't think it should be financially based. One thing we could do maybe is at the live shows, like just pull names from a bucket, something like that.
Yeah, that's a good idea.
I mean, I'm not opposed to the idea, but at this point, just the idea of having other people do it is still something I'm experimenting with. But it's a decent idea. I'm not against it. I think I would rather do it in person.
I think that makes more sense because it does kind of sound like paying for time on your show, which is like kind of what you're trying to avoid a little bit.
Yes and no, because like all you have to do at this point is contribute anything, and I read any old like anything that we've heard some crazy shit put on this podcast. And so that's the thing. Like I will air all but the craziest of the crazy. And so people really are paying to have their voices heard, but we just don't hear their actual voices. So I guess I don't really know what the difference is. I guess it's just something I have to think about more because I don't know how I'd pull that off. We have too many subscribers to let everybody do it. So I guess that's a thing too. I just want to do it fair. And I don't know how. So maybe that is something for our community to ponder. But Chris, it's a good idea. I'm not against it. We also got 2232. Love that one from Zelle. This was from Hank Barta. And he said, "Hi, Jen. Thanks for all of your work." Oh, frog. A ribbit. All right, let's try that again. "Thanks again for all your work putting together this podcast. It is much appreciated. I was deeply chagrined that I got the amount wrong in the last check." Oh my God, this is the guy that did 2032 and I made fun of him for like 2 separate episodes. He said, "I meant to pay 1 penny per page of the omnibus bill, but I couldn't recall the exact page amount. I tried to search for it, but was not so lucky, and I needed to get that done because I was on the way out the door. So I put down my best recollection, and it was $2 short. But I won't give up. I just gone through the Zelle process again and sent 2232. I heard you mention it on the most recent podcast and wrote it down this time. Hope I got it right." You did! Yay! "By the way, I was happy to hear you had such a great time in Cabo. You deserve it. Best, Hank." Oh, we had the best time in Cabo. "P.S. Since you're still talking about the omnibus bill, technically I'm not too late." Oh no, you're not too late by a long shot. I'm going to be talking about that omnibus bill until the next omnibus bill is signed. I mean, this thing is taken forever. I kind of talked about it in the beginning of the episode, Joe, but I'm doing the State Department. So this is one of the reasons that I switched to this topic. I was working on the State Department episode last week, and I was working on it on Monday. And first of all, I had C-SPAN on, and I realized that they were going to do this monster baking thing. And I've known this was coming. I didn't think it was coming this quickly and that it was going to become law. So I'm watching C-SPAN. I'm watching that happen. But as I'm reading through the State Department stuff, I'm finding out about all these different funds. And I didn't know what any of these were, but this is where the economic warfare is done. That's how we're funding it. It all goes through the State Department. This whole time I've been looking at the Defense Department and military construction to figure out like which countries we're fucking with. I needed to look a lot closer in the State Department, so I'm figuring that out now. So not only am I finding out like that these funds exist, I'm figuring out what they are. So for instance, like there's funds that they function completely in a private way. So our taxpayer money goes to private funds that give out money to private organizations to do God only knows what with them. So they sound like they're funded with our taxpayer money, but they're completely private. They're controlled by private citizens. They decide what happens with the money, which what the is that?
Yeah, that's crazy.
And there's more than one of them. So I really need to learn the backgrounds of this, like where they came from. It's rabbit hole upon rabbit hole upon rabbit hole. And then as I'm learning about this, I found out that Mike Pompeo is going to be testifying. He testified yesterday and today. So yesterday was the House, today is the Senate. And so while I'm doing the State Department, I might as well hear what the new guy is planning to do, because these two meetings are basically to like beg for the next funding batch. So we're going to find out what they're doing with the funding now and hopefully find out what he wants to do it later. So I just feel like that whole thing together, I was just like, I can't do the State Department right now. I'm not ready. But when I looked at what I already kind of had, which really wasn't much, I just wanted to air some of this interview with this lobbyist, but he was talking about this banking bill. And so that's how I switched gears. But it did mean having to read this almost 200-page finance law to pull this episode together. So that's why I've just been like reading for like 3 days now. So yeah, I really bit myself in the ass with that one, but at least this is done. I knew I'd have to do this law. I'm actually going to be ahead of the game on this one, considering I'm so behind on the omnibus, which I'm not really beating myself up over because it's over 2,000 pages. But at least this one, like this is current news now. Although it's really not, because no one's talking about it, which is another thing that's making me crazy. Like, what are they talking about right now? They're talking about, oh, Trump pulled out of North Korea talks because he didn't want Kim Jong-un to do it first. It's like, oh, of course, there's big baby Trump news. But no one's talking about what's in this law, right? Have you heard anything about it?
No, haven't heard anything.
Do you even know which law I'm talking about?
No.
Well, there you go. And I'm not going to fill you in right now because that's what the whole fucking episode is about. But the point is, big stuff is happening in Congress. And the reason I started this is no one's talking about it. So at least I am talking to myself. So yeah, that's what happened. I can tell you right now that what I did today with this episode is so much harder than what I'm going to have to do tomorrow on the Young Turks, because I'm having a conversation. It's fun. I get it. I get why MSNBC and CNN and Fox hosts just want to chit chat about shit. But you're supposed to be informing people. You're supposed to be doing work for millions of dollars. But instead they're doing corporate bidding, and I'm doing all of this work. I'm not qualified for this, and I'm not telling nearly enough people to make a difference. So yeah, I'm fucking frustrated this week. Yeah, moral of the story is you're right. I'm over it. Back to the list, we also got a $20 Venmo from Danny Truster. And Danny says, sorry to keep sending you payments through Venmo. Don't be. I love the Venmo payments. I know it's a bookkeeping pain. No, it's less of a pain for me than it is my friends. Because I keep telling everyone to Venmo Joe, because that's how we kind of keep it separate. But Joe doesn't mind. That's actually how we refill his account, because all the friends pay him for stuff. So it's fine. If you guys want to pay with Venmo, it's perfectly fine. Don't worry about it. I tried doing Zelle, but when I put your email to find you, it said I could only send funds to someone who is signed up and is a member of their partner banks. I'm not sure what that means. What that means is I didn't set it up properly, but it's set up properly now. So don't worry about that. You're going to want to do donation@congressionaldish.com. But she said, but if I can figure it out, I'll send through Zelle. In the meantime, here's your hard-earned cash. Thank you, Danny. Yeah, I just, when I signed up for Zelle, I had to it's one of those little switches things in the back of Zelle. And so after I sign up with the email, I had to turn it on, which I think is so stupid. Why would I sign up with this email address if I didn't want it on? But that's what happened. So for months, people were getting this message that said, you can't accept payments until this person sets it up. And I didn't know this until my friend Damien was like, hey. And So yeah, Zelle's a little weird. But now that it's set up, it works great. And speaking of Zelle, we also got a $13 Zelle payment from Thomas Rabbit, who said, cool show, bro. I'm glad you like it, bro. Shouldn't it be like,
Thanks, bro.
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 I like bros. I'm fine with this. We also got a $10 anonymous Bitcoin payment. So thank you for the Bitcoin. We also got a $10 Venmo from Eric Cal Schuler, who said, your show, more to come. Well, thank you, Eric. We got a $10 check from Michael Reif of Orlando, Florida. Thank you, Michael. We got $8 on PayPal from Renita Leone, who said, great episode. Definitely frustrating that hawkism is the way we operate regardless of party lines. True dat, boo. Thank you, Renita. We also got $5 on PayPal from Michael Ambrose. And Michael said, I prefer you save your breath and just run ads. How is that saving my breath? It's just using my breath to tell you about some corporate I still have to use my breath.
Man, I was listening to a podcast the other day and they had an ad break in the beginning and an ad break in the middle, and it was the exact same ad. And it killed me.
That's horrible. I gave Ezra Klein's podcast a try, and his conversation, he breaks it up so many times with ads. At least one of the things he does is he puts music behind it. So when I'm fast forwarding, I know when it's back to the conversation. But I had to pull my phone out of my pocket so many times. I was just like, all right, I can't stick with this podcast. I'm gone. I'm done. Bye.
Yeah, it's so annoying.
Yeah, I'm just not doing it. Back to the note, he said, I'd FF, follow Friday? What do you think FF is? I'd FF through, fast forward through either, but with ads, I'd have less guilt. If you have guilt, with ads, you'd have less guilt. I don't know what to say about that. If people are feeling guilty, just contribute to the damn podcast. Like, do you really want to have your time sold all the time? Like, isn't your time precious to you? It's precious to me. Like, I would pay $1 an episode for so many podcasts if they'd kill the ads. But what podcasts are killing their ads? I do support podcasts that don't do ads. I support District Sentinel because they tell me about Congress and they don't have ads. And so I give them money. I do practice what I preach. And I'm contributing to GovTrack right now, but they are spamming their website with ads. But like, I do contribute to stuff, and that's how I alleviate my guilt. I support stuff that don't waste my time. And especially knowing that all the damage that this advertisement is doing to the media landscape and the world and everything, and how it's all corrupting. Just this argument, I don't know. Speak, Joe Briney.
No, it's like he's feeling guilt because he knows you've given him value, right?
And he doesn't want to like actually pay money for it.
Yeah.
But here's the way that I think about it. How much, we're all fighting for 15, right? $15 an hour. That's what we agree is the minimum fucking wage. Where's my phone? Where's your phone? I need a calculator.
Dog's sleeping on it.
She'll live. Move the damn dog, please. I need a calculator. Okay. So at $15 an hour, that is, and these people are doing 1 minute ads. So let's do this with a 1 minute ad. $15 an hour divided by 60 minutes is 25 cents per minute. So in order for me to make the same amount of money I'm making now, I already did the math, I would have to insert 32 minutes of ads into every podcast. So at 25 cents a minute, I would have to, that's $8 basically, is I'm saving you. I'm saving $8 of your time by doing this business model, by letting a bunch of people determine what this podcast is worth to them, for me not to put 32 minutes of your time. Like, that's such an enormous amount of wasted time. But that's $8 an episode. That's how much every single person. Does that even make sense what I just said?
It totally makes sense.
Yeah. So 25 cents a minute at 50, like for every minute ad you hear, that's 25 cents of your time. So there is a dollar value on that. So why is it when you're at work, you demand that you be paid for your time, and in your recreational time, you're just going to piss it away and give it away to all these fucking companies? What is that? All your time is valuable. Every second of your time is valuable. I'm just acknowledging that. And if you want to take the podcast for free, I'm not stopping you, but that guilt is on you. Right?
Yeah, totally.
Yeah. All right. But Michael, thanks for contributing to the podcast. I didn't mean to yell at you, but like, no ads. It's not going to happen. We also got a $5 check from Zachary Gilman, who said, thanks for the show. You're very welcome. And a $5 check from my good friend Bud Johnson of St. Petersburg, Florida. On the check, he said, for Congressional Dish 172, good show. Love you, Bud. Love you too. And Bud, I got your note. I will leave it between us, but I did get it. And I'll just write back to you on email sometime soon. And now we also have some messages from current subscribers. So the first one is from Ramesh. I love his messages. He is a $15 a month PayPal subscriber. And he said, Jen, my 2 cents. I think the podcast on Syria was quite informative. As always, you stick to facts. Facts are not easily available in the abundant BS spread by the mainstream media. It was news to me that Assad did murder his people, but you explained it well that so did others. Putin, Obama, Hillary Clinton, etc. Neocons are in a class by themselves. They provided power to dangerous ideologues and unproven economic theories. You made an excellent point that Trump's attacks on Syria are illegal. I can't believe the moron ordered $250 million burnt on useless missile strikes and another $200 million on the mother of all bombs. As many have observed, Flint still lacks clean water. I'm not really sure that those figures are correct, but I totally understand your point that like we're dropping bombs and Flint still doesn't have water. He said, by the way, did you catch that comedy routine by Michelle Wolf? That's exactly what I was just thinking. I was unaware of who she was. Jon Stewart was generally a great guy, and I watched his episodes occasionally, but stopped watching The Daily Show after he left. Yeah, I don't really watch it anymore either. I miss Jon Stewart so much.
Well, and it's also a different time. Like, we were always home watching TV at that time.
Yeah,
and we went for a while without cable. Like I've picked up a few shows with Trevor Noah, and he's pretty good.
Oh, it's nothing against Trevor Noah. It's just the fact that I like to be in bed by 9:45 every night. It's just that I'm old. In the W. Bush years, we were drunk every night and up until 2 a.m.
Yeah, basically.
Different times. Back to his note, he said, if you were to pick a mandatory reading list for progressives, what would it contain? Well, first of all, I wouldn't have a list for progressives. I'd just have it for Americans. And he said, I read the Shock Doctrine because of your recommendation. Regards, Ramesh. Well, along the lines of the Shock Doctrine, I would read probably the new Confessions of an Economic Hitman, because that's the updated version. But that one really opened my eyes. Like I just said 15 times in this episode, Chain of Title by David Dian just explains the foreclosure crime so well in a way that I've just never quite understood. Dark Money was a good one. Who wrote that one? I don't remember. But Dark Money was good. I'm only halfway through All the President's Bankers by Naomi Prinz, but that one's been really good so far. Some fascinating history. Legacy of Ashes is about the CIA. It's super, super long, so I'm doing that audiobook style, but that's a very detailed account of all of the fuckery of the CIA and all the regime changes and all of that. It's so eye-opening. Yeah, those are really the essentials. Do you have any to add?
No, I haven't read a book in a long time. I'm not proud of it, but it's just been a while.
Okay. Well, there you go. But yeah, those are some really good books if you guys want to check them out. But right now, I mean, my number one book, you guys have to read Chain of Title. It's really no joke. It's so good. And it sounds like a boring topic, but I couldn't put it down. You saw me in the airplane. I was on my way to Cabo and I was just like, don't talk to me. I'm reading a book about foreclosures. Nerd. So yeah, I'm really impressed by that book. But yeah, thanks, Ramesh. Great to hear from you. We also got a message from Josh and Kia Carter. They are $15 an episode Patreon subscribers. And they said, I don't care one way or another about the vulgarity. It doesn't distract from the content for me. However, your golf swing is iconic. They don't call you Jen Golf Swing Briney for nothing. Well, actually, me and one other person, we call you that.
That's a good nickname.
I like it. I like it a lot. That's cool. And even though you don't mind it, because you're Patreon supporters, you get the unedited feed anyway. So there you go. Oh, so I wanted you to do the thank yous with me specific because of this email. This is for you, Joe Briney. This is from Ruben.
Boy.
Ruben says, hey, Jen, as much as I've enjoyed the arguments surrounding the correct pronunciation of my last name, shame on you, Joe, for not even trying. I'm trying to take you out of your misery. Yes, you actually are the first person to pronounce it correctly in a long time. You were really close in the episode before last, but were spot on in the last episode. I've been working with the same people for the past 11 years, and none of these fuckers know how to pronounce it. And I tell them constantly. I've tried to go phonetically with symbols through interpretive dance, nothing. For all these reasons, I've decided to make you an award. I really ain't doing shit today at work. Shh, don't tell anyone.
That's amazing.
Anyway, glad to see you guys didn't get alcohol poisoning in Mexico and came back in almost one piece. Later's Ruben. And look what he made. A certificate of achievement. It says, the International Academy of Completely Unimportant Affairs hereby lets it be known that Jennifer Briney, for the outstanding achievement of pronouncing the last name Gaztambidi correctly, is hereby recognized with all the honors, rights, and privileges that this achievement involves. Yes!
Well done.
I win!
I think that needs to be framed.
I know. I think so too. I genuinely think so too. I can have that done at Walgreens and just frame it in the office. I think I'll do that. Ruben, we're framing the certificate of achievement. I love it too much to have it not be on my wall. So let's make that happen. I like it. But yeah, thanks, Ruben. You are so the best. And Ruben, his Zelle payment came in today too. $12.50. I love his Zelles. I love the Zelles and the Venmos because I just see it on my phone. I'm like, hey, just got paid. And then last message of this episode, we got a Patreon message from Matthew Golgoski. And he said, hey guys, if you'd like to have my last name spelt phonetically, Golgoski, you were pretty close. I think last week I said Golgoski because there's an O in the middle of there. But he said, you were pretty close, and believe me, I've heard it botched way worse before. I've gotten to a point now when people ask me for it, I just spell it for them. It seems easier. I caught you in the tinfoil hat, and after listening to a few episodes, I felt I had to contribute to someone who was willing to take on a 2,000+ page document. That I had no idea really existed. He says, gonna take a lot of green to unwind from that one. Don't I know it? And for some out there, fun conspiracy pods, the Higher Side Chats, Grimerica, and the Conspiracy Farm are some good ones. I do think it's funny how the conspiracy crowd is so supportive of my fact-based podcast. Like the conspiracy people just let any old random thing fly. Like Sam Tripoli, he loves the whole like Hillary Clinton is a lizard person theory, which I do too. I think it's so funny, but it's based on nothing. And yet I've gotten so many new people from his show that like love the show notes, you know? It's like, it's so funny how we all can be into conspiracies, but then also want the facts at the same time. And we're all very interesting creatures with what we seek out.
Well, I mean, you're also uncovering conspiracies. Several people working together to take money from the rest of us.
Yeah, I guess that's true. And I think that's why Greg from the Higher Side Chats has had me on multiple times. And hopefully I'll get to hang with Sam again. I think that conversation went really well. God knows I loved it. But yeah, there is some crossover there. And I think what's fun about what I'm doing is like, yeah, I'm talking about conspiracies, but I'm backing it up. You know, with the whole Hillary is a lizard thing, you need to like find her skin in the corner somewhere as proof. It's going to be really hard to do. But
I'm sure she eats it right away.
No, Bill does. That's why he's still alive.
He doesn't look good, man.
No, he doesn't. He switched from McDonald's to Hillary skin. Now he's a vegan. He's messing with his diet a little too much. But, wow.
It's a great finish.
Yeah, I'm a big fan of it. All right, so now I would like to thank the people who literally helped me do this podcast. This is my staff, for lack of a better term. I'd like to thank Jessica and Margie and my new agent, Alex, at Interview Connections, because I'm flying to LA tomorrow for the Young Turks, and they made that connection happen. So thanks, girls, for all your great work. I'd also like to thank Daryl, Karen, Mike, and Carrie at Pro Podcast Solutions for putting this jumble of a podcast together. I want to thank Jessica Hershey. JessicaHershey.com is where you get the best virtual assistant I've ever had. I'd also like to thank Brian, who is the owner of Only Child Imaginations. He does all the artwork for every one of these episodes for the last 75 episodes. He's so talented. I'd like to thank my sister Lauren, who puts these lists together and does all my accounting. And I want to thank Joe and Dad for supporting me in your own ways since the very beginning.
You're welcome. I'm proud of you.
Boo. Love you.
I love you too.
I'm proud of you too. You've done so many good things. So, all right. I think I'm done. Are you done?
I'm done.
All right. I love you all. I'll be back with what I think is going to be a pretty fascinating episode about the State Department in 2 weeks. Till then, happy Memorial Day. I'll talk to you guys soon. Bye-bye.
Adios.
We're surrounded now by liars coming at us through our TV screens.
We don't have a domestic spying program.
They're content to fight in black and white despite the many in-betweens. We got a president who plays with the facts. And then he waves a flag to cover his tracks. As if a lie is alright, in the end will justify the means. Now we are so damn tired of being lied to.
The polar ice caps aren't going away.
We don't think we can deny it anymore. You can stick to your story if you think it lies. But we're not keeping quiet anymore. We are so damn tired of being lied to.
Government jobs consume the profits of the private sector.
We don't think we can deny it anymore. You can stick to your story if you think it flies. But we're not keeping quiet anymore. Now we're not keeping quiet.
These bills represent common sense, bipartisan solutions that actually solve problems.